Welcome. My name is Sasha Moore, and I am here with Matthew Porch, who is the head of distribution at Aquamore. Welcome, Matt.
Hi, Sasha. How you doing?
I'm good. So I'm really keen to just explore some of the trends that you're seeing at the moment in private lending and really understand how they relate to, the broader macroeconomic environment that we're operating in at the moment.
Mm-hmm. Yeah, absolutely. Some of the trends that we're seeing in private lending, it's a lot of it seems to have turned on its head, especially in the last sort of 18 months, where major bank lenders are really pulling back from the market. We're seeing a lot of very good quality deals, which, that's what I meant by it's turning on its head. The private lending space has traditionally been for clients that are not really bank quality, but we're seeing a lot of very good bank quality deals come into the space. We're seeing a lot of residual stock loans where, the initial exit strategy was a sale of the asset. Developers are obviously seeing a downturn in property prices, and they're not looking to take a 5 or 10% hit on the sale. So they're looking for a very much short to medium term bridging solution, which we're seeing a lot of that, where the developer will finance it in private lending and hold off until the property sold at a more agreeable price. We're seeing quite a lot of that as well. We're seeing a lot of good quality deals where the banks are pulling away for whatever reason. A good example would be a service station that we funded in Tasmania. Again, it was, in my opinion, a bank quality deal, a very experienced client who actually operates 3 other petrol stations. But the fact that it was in Tasmania seems to have frightened off a few lenders. The fact that there was no previous trading figures, again, appeared to frighten off the major lenders, but we saw the potential in the client with their experience. We had financials for the 3 existing operating entities, so we knew exactly what they were doing, and we saw past the risk to fund them, and it was a very good result for that client. So there's a lot of that happening in the private lending space.
I guess the real takeout then for brokers is that it is an evolving market, and to not have previous perceptions about a quality of a deal being associated with a particular lending type.
Yeah, that's correct. I mean, everybody's got their own definition of what a bottom drawer deal is. And I guess it's my advice for the brokers is just to understand what your lenders specialize in and what their niches are, and every lender's got a different sort of appetite, especially in the private lending space, where certain industries are preferred, or certain loan types, and all the rest of it. So it's more just understanding what your lenders' appetites are.
Yeah, and I guess to that point is that's where your BDM becomes your best friend as a broker, right?
Yeah, absolutely. It's certainly a relationship business, and that's what I tell all my guys on the ground, is that it's exactly that. We'll give you a quick answer, even if we're not going to do the deal. It's always a quick no thanks on this one, but maybe on to the next one. So that relationship piece, it's very, very important in my opinion.
Yeah, absolutely. Okay, thanks, Matt. See you next time.
Thank you.